Hey all, welcome to ShareTrek. This is Raj here. Hope you guys are having a great weekend. I'm doing well out here on my own because I've been busy making a new desk. So I've been doing a bit of woodworking of late. And I've also got to start on painting a big canvas, which I'm going to roll up and send off to the lucky winner as soon as we touch 5,000 subscribers. So those are the two projects that I'm working on when I'm not making videos. So the cat's out of the bag with that. Soon I'll come up with a contest for the painting. So please watch out for that. We are on our way to 5,000. And if you're not yet subscribed, please subscribe. That said, today I want to talk about a slew of bank results, and also I'm going to give you an advanced preview of which company I'm going to cover that's going to come up with an earning in early August. And I think we need to look at that pharma company. So with that said, let's get started. Welcome back, friends. We have witnessed a slew of bank results very lately and for this current quarter, and it has been very motivating. For instance, Citigroup posted an EPS of 1.33 versus an expectation of $1.30, and a revenue of 19.44 billion versus expectation of 19.24 billion. However, due to raising costs, its net income fell a whooping 36% year on year, despite the EPS beat. So in terms of earnings results in the banking sector, I think Citi came in a bit weaker, but all the same, it's been positive and above expectations. Next, we look at JP Morgan Chase, which also bet EPS expectation of $4 per share and announced an EPS of $4.37. And also it bet revenue expectations spectacularly by coming in at 42.4 billion against an expectation of 38.96 billion. And not to be left behind, Wells Fargo, despite all its problems, also bet EPS expectations of 1.16 by coming in at $1.25 per share, and narrowly bet the revenue expectations of 20.23 billion by coming in at 20.53 billion. So even Wells Fargo has done well. And we had a impressive earning from a healthcare company. I'm looking at the healthcare company because it's the closest it gets to our genomics. So shares of United Health closed up more than 7% Friday as it posted an EPS of $6.14 adjusted versus 5.99 expected, and a revenue of 92.9 billion, higher than the 91.01 billion expected. So that's a very big positive for United Health. United Health also raised the lower end of its full year adjusted earnings outlook. So overall, everything is looking hunky-dory. Now, I dread to look at what the Fed will think about if it sees that earnings are all going very strong. So basically that means that the market has got a lot of juice in it, which would mean inflation is going to take longer to get tamed, but I would rather not look at that side. But what we as genomic investors need to do, for the market to do, is for investors to start moving money back into our watch list company. And that can happen only when animal spirits return to the market or FDA approves therapies. And we know that there are only two companies for whom FDA has therapy approval scheduled somewhere towards the end of this year. That is CRISPR Therapeutics and Bluebird. But for animal spirits to return, that will happen when people start moving money out of fixed income and back into stocks. They are all in fixed income at this point of time, mainly because they have really good returns with very less risk. So that's the reason why people are in there. And look at this dynamics here. If you were to buy a bond at this point of time at a face value and it gives a high interest rate, let us say of 4.5%. So as the interest rate drops, the face value of the market value of the bond is going to keep on going up because people will pay a price for the bond which is equal to the return that is currently given by the market. So as interest rate falls, the market value of the bonds will go up. So many people are in that kind of a dynamic. So the money has to come out from there. So when the interest rates start going down, what will happen is many of these people who are holding the bonds will end up selling those bonds and moving that money out from there into the stock market. So that's when the animal spirits will start coming in, because they have made a lot of profits and they'll be much more relaxed in looking at bargains. So that's my opinion. I would like to hear what you guys think about it, because currently we may experience sectoral rotation, which provides swing trading opportunity, but nothing is a given. I think that from now until end of the year, until the interest rate starts dropping, we are just going to be moving sideways, which would be a few days going up, a few days going down, and staying in a range. That's what I'm thinking might really happen. I really wish that by the end of next quarter, the inflation drops enough to allow the central bank to indicate future cuts in rates, and that will do the trick. Meanwhile, I am working on a profile of Gilead Sciences that I think we should look at before their earnings due early August. Unlike our genomic watchlist companies, Gilead has been steadily growing its EPS year after year. They also have a very strong pipeline. I hope to have that video up either tomorrow or maybe early next week. So that's what I'm working on right now. And yeah, that's all for today, my friends. Have a great weekend. I'll catch up with you again in the next video. Bye for now.